Hey everyone, welcome back to Lunch in the Market. We've got some unusual activity that we're going to cover for you today, and we are going to work on a column. Hopefully, it's going to be out soon. I don't know what we'll call it, unusual activity report or UAR. UAR, that probably sounds good. It's kind of like L at TM for Lunch at the Market. All right, so anyway, so UAR for today, unusual activity report. We are checking out bull and bear activity because with the markets at all-time highs right now, at least for the Dow, uh, what goes up must come down, right? And so there's some big moves today, especially in one name that we're going to cover that we like some bearish options activity on, and it helps to be diversified. And you can overweight one way or the other. If you're really bearish, you can overweight those trades, and if you're bullish, then you can overweight those trades. But it does behoove you to be stock specific in this market. Look at what Cliffs Natural Resources or what's the other big coal name? Well, really all the coal names, right? They're terrible. They look absolutely hideous right now, and they really haven't participated at all. And so it is a stock pickers market. Financials still are not anywhere near what they were years ago. Meanwhile, things like industrials, consumer discretionary, things like that are working really well in this market. Okay, so without further ado, let's get you to the trades. So the first one that we talked about, that I referenced with major bearish activity, we tweeted it out that we were seeing major bearish activity, and you can always throw up the options chain to go look through the different expirations and find out where this unusual activity is happening. We found it in June in CREE, C-R-E-E, ticker symbol CREE. This is a name that years ago we tried to play from the long side, and it went hideous and horribly wrong against us. So the stock is up $6 today. It's trading around $51.43, and we found somebody went out and bought a 12,100 block of 50 strike puts. Actually, no, that's the open interest or the volume today. Volume was at 12,100 on the 50 strike put. So we looked through the rest of the options chain. There was an equal bet placed at the 46 strike put. How do we know? Well, 9,975 was the amount of the block. 9,975 was the block. So it was actually easy. Once we saw the volume at 12,000 on the 50 strike, we went and looked at the volume on the 46 strike. It was 10,500. You go through and on Trade Monster, you have the ability to actually see the blocks go through as they go through. Okay, so we matched them up. 9,975 trades went off at the 50 strike and the 46 strike. Obviously, that's the same buyer. So you have two options. Either this person's really incredibly bullish and they're selling a put spread, or this person thinks, a $6 better than 10% move in a name that's had a lot of trouble in the past is set for a tumble. Also, June is a very bearish month, right? Sell in May and go away. Yeah, that's coming up here, folks. At the end of April, lighten your positions in a very material big way, okay? Because this correction that everybody's looking for is almost 100% going to happen in the summer, okay? That's when earnings go away. It's going to be a while. Things start to slow down. People go on vacation. Traders go on vacation. Volume dries up. There's all kinds of reasons to hate the summer. So the reality is 9,975 times the 50-46 puts, okay? We're thinking that it's a long put spread, long the 50, short the 46 against it. So what did we do? Well, we actually wanted more juice. We looked at the numbers and it made sense. We went with the 50, 36, 34 bear put fly for $3.55. Okay, this gives us huge downside protection, $14 downside protection. Uh, if the stock went into the 20s or low 30s, then you're talking about $12, right? We buy it for $3.55, it's worth 12. Break even for us is at $46. So that's right where that other put, right, was sold at, right? We think it's a 50-46 put spread. The 50 was bought, the 46 was sold. So our break even is actually at that 46 strike. Anything else to the downside is all going to be gains for us. Anything else to the downside, because what we've done is we've sold 150. We've bought a 50 strike put. We've sold two 36s against it, and then bought a 34 under that. Okay, so we like it. There's huge activity at that 50 strike put. out in June. June is a very, very bad time to be long. It's a great time to be short. Okay, so that's the unusual activity that we saw in CREE, and that's the trade that we put on. It's again, so many things are going up today. Things are flying through the roof. Everybody's excited. All-time highs in the Dow. So we think it's prudent to go ahead and start putting on some of those things. They're going to work in our favor in a bearish fashion as the markets pull back, test some of these gains, digest some of these gains. We're going to turn for a while. We might trade lower to absorb some of these. As people got in much lower, they're going to start taking those profits off. And a lot of money managers have had a good year, and so there's really no reason to stick around into May when the gains have been so good. Okay, so on the bull side, what is happening on the bull side? Right now, TPX, okay, TPX is trading around $42.81. Yesterday, we saw some really big options activity, and the open interest at the 41 strike call is 13,881. At the 45 call, 9,415. We saw some blocks, some 5,000 blocks that went off yesterday, and we think that that is a call spread. 41, 45, March, okay, March, so expires next Friday, March, 41, 45 call spread. You can actually buy the 41, 44 call spread for, what did we pick that up for? $1.15, I think, $1.15, $1.25. It's actually already totally in the money, okay? So you basically can pick the stock up right where it's at, okay, completely intrinsic value, and then you have two options. Either A, the stock blows through 44 and your whole spread's going to resolve itself, right? The in-the-money 41 will get triggered, the in-the-money 44 will get triggered, and you'll make the difference between the two. You make 100% return by next Friday. It's not a bad bet. And the stock can stay pretty much right where it's at right now, and you can roll it out and try again the next month or whatever you want to do with it. But you have some big flexibility. There was huge buyers of these calls. The 41 and the 45 strike calls were active. We think that it's a long call spread. Long the 41, short the 45. Okay? All right. Back to some bear action. Big lots. BIG. Okay? 32.5 strike in April, 27.5 strike in April. Exact same blocks, 1,750 blocks. Boom, boom, went off. We think, again, with the stock trading at $33.92 and all the euphoria, we think this is a bearish put spread. So it's a 32.5, 27.5 put spread. Pay $1.25 for that spread. You're about that away from where the stock trades right now. So you are going to need to see the stock decline by $2.50, just under 10% in order to break even on this trade. But again, 1,750 block, boom, boom, went off at the 32.5, 27.5 put spread. We think it's a put spread in BIG. Okay, back to the bull side. Everybody hates gold right now. Everybody hates gold. We lost good money last year in gold. In fact, a lot of people lost good money in gold. Nowhere near what Paulson lost in gold. We're not going to shut our firm down because of what happened in gold, and I don't know what's going to happen to Paulson ultimately, but we do know that the guy got whacked on the head with gold. Okay, huge bullish activity in AUY. AUY. It's actually also a stocks under $10, Dave Peltier favorite, AUY. He did sell some up near the 17 range or so, and it's traded back down. AUY is trading around $13.75. If I remember correctly, it's actually down on the day. Okay, down on the day. Everybody hates gold. Even in a massive rally, gold can't get a bid. But there's a lot of money printing going on around the world. The Fed has said that they're going to stay easy. This will be for the July expiration, which again is, that's right, folks, in the summer when things will probably look bad. Gold has been a safe haven currency in the past. So as markets sell off in May and June, this is a good idea. We like it. It's a low dollar bet. Okay, so where is the action at? 6,970 on the volume side, right? On the 16 strike call, 6,600 on the volume side on the 19 strike call. We actually found two exact boom boom lots for 4,291. 4,291. I'm not really sure why the incredibly odd amount, but it's definitely the exact same volume at those two different strikes. So we think somebody's buying the 16 and selling the 19. Why? Well, because it only costs you about 33 cents to do this trade. Why would you risk getting banged for $3 to make that 33 cents if you're a seller, right? If you're a seller of these calls, why would you risk $3 to make 33 cents? It doesn't seem like a great risk reward. But on the other side, risking 33 cents to make $3, right? Buying the 16, selling the 19 against it for 33 cents. I like the trade a lot, actually. I think it makes a lot of sense. I think that 4,291 at both strikes indicates somebody's in there doing a spread. We think it's a bullish call spread. Okay, here's a flyer. MTG. MTG. We saw huge open interest at the 5 strike and the 7 strike in January of 2014. 5 strike and 7 strike. 19,196 is the open interest of the 5 strike and 28,052, right? 28,052. This actually could be some kind of ratio spread, meaning, buy 1 and sell 2 against it. And they're thinking that the 5 strike is going to be blown through, which the stock is actually at $5.18 today. It is up big today. Okay, so buy the 5 and then sell 2 7s against it. I don't know that I want to go that route because I don't know where this thing stops on the upside, but I do like the trade in terms of a call spread. So we bought the 5, sold the 7 against it. You can actually do it. We paid 57 cents earlier this morning. You can do the trade now for 64 cents. It's obviously worth $2 if it goes all the way to $7. So it's a great risk reward. It's actually in the money already by 18 cents. So if the stock just does absolutely nothing, you're looking at 18 cents. So I like the trade a lot. It's slightly in the money. You buy the 5, you sell the 7 against it. The ticker symbol is MTG. Massive activity. And it looks like there was more activity at the 5 strike today. The volume today is 2,370. So again, this was massive volume that we saw yesterday, and people went in again today. 2,370 on the volume on the 5 strike as of when we got this ready. Okay, so there's 3 bullish trades and 2 bearish trades. Our bearish trades are CREE and Big Lots. Our bullish trades are TPX, AUY, and MTG. So check these out. We like selling premium whenever we buy premium because A, we're already hedged, B, it reduces the cost of the trade, and C, especially when you get the in-the-money stuff like the TPX 41.44 call spread, one leg's already in the money, and you can actually buy it for basically less than the intrinsic value. We like that a lot. So take a look at these trades. Thanks for joining us again on Lunch of the Market. Tweet us or leave comments if you have questions about something that you're looking at. Thanks for joining us here at Magnum Opus Financial, and have a great day.